Welcome back. You're watching The Big Idea. In the face of economic constraints, consumers have become more cautious about splurging in luxury items. This due to rising interest rates and high inflation. Now, this trend is evident across prominent luxury brands such as LVMH, which have recently reported a sluggish growth in sales. This, of course, continues to raise demand concerns in the luxury market overall. Before delving into the growth trends of the sector in greater detail, let's take a look at this package report.
It's the biggest name in luxury and a bellwether for the whole sector, which makes the latest results from LVMH a warning sign for some of the world's most exclusive brands. Sales growth at the firm, which owns Louis Vuitton, Tiffany and countless other big names, slowed to 3% in the first quarter. That as shoppers held back on big purchases amid rising prices and high interest rates. LVMH is Europe's second largest listed company, worth around $425 billion. It's also the first luxury goods maker to report earnings each quarter, setting the tone for the sector. Expectations had been low amid concerns over demand in China. Arch-rival Kering, owner of Gucci, last month surprised markets with a warning that its sales were set to slump 10%. It blamed weak demand in Asia. Given that, one analyst described the numbers from LVMH as broadly okay. The company says it sees signs that Chinese travellers are starting to spend again. It says demand from wealthy buyers in the US has also held up well. But it says less wealthy, more aspirational shoppers will need a while to adjust to the prices now demanded for luxury goods. LVMH shares have dropped about 11% over the past year amid the worries over the sector, but that far outperforms the 40% decline at Kering.
And joining me now to unpack how the global luxury economic trends influence the market outlook is co-founder for Luxity, Michael Zahariev. Good afternoon to you, Michael. Thank you for your time.
Great to be here with you today.
All right, Michael, maybe we can start off by taking a look at this global luxury market and bring it home here to South Africa. How has it fared, amidst all the macroeconomic headwinds, and there have been a lot?
Yeah, well, I think the South African market, is essentially to these brands a market which isn't that important. And I think that, one of the interesting things that we're seeing is with China, which was really the staple for where the brands were going for that growth, with the Americas and the Europe markets being quite stable. They're really reliant on the Asian market as an indicator for growth. And with that slowing down, we're really expecting these brands to start looking at Africa a little bit more seriously and innovating for the long term, because they're starting to realize that they can't just rely on this Asian market any longer.
That is a very, I think, interesting development because, of course, right here on the African continent, and I think just the other day, Michael, we had a wealth report that came out that said that Africa, will birth more millionaires in the next few years than any other continent except for Asia. So lots of potential is sitting here. And I'm wondering how that then does play into the new versus used market, and if this might be the perfect territory for both of these markets to thrive.
Yes, exactly. Well, we've seen that in Africa, the used market is certainly thriving. Luxity was ranked as one of Africa's fastest growing companies by Financial Times. So there's definitely the growth there. And that growth hasn't slowed since that ranking. So certainly consumers are investing in the pre-owned luxury market. Of course, we know it's at a lower price point. And traditionally, the African consumer has a lot less spending power. But dollar for dollar, the South African consumer is spending far more than their peers in terms of their earnings on luxury goods based on our lower earning capacity. So there's definitely a potential. There's definitely the demand. What really is the factor preventing it from growing is our earning capacity. So if Africans grow that earning capacity, the demand certainly does exist there. And we're already starting to see this with many of the shopping centers having realized that luxury is a growing category in Africa, reinvesting in their luxury wings. We're set to see many new luxury brand entrances, we predict, over the next couple to 3 years as these investments in in the luxury departments of these malls start to finalize. So certainly there's going to be definitely a growing trend for luxury in Africa and specifically in South Africa.
Now, Michael, of course, we speak about inflation and we speak about food and other, necessary items there, and that's been quite steep. But what's been alarming for me is just how steep the increases on luxury goods have been. Really, really steep increases, and I'm wondering if that, is also playing itself out and here at home, and then playing into the ability for middle-class people, which is always emerging on the African continent, to tap into the luxury market.
Yes, I mean the record price increases really have been quite an anomaly and something that we've seen as a result of record demand. I think that's what's really important that we have to nurture, is that all these earnings that we're seeing here is because the bar was set so high from the post-pandemic recovery. So that record demand which is what has led to these record price increases. Of course, when we're dealing in the luxury market, the brands need to stay exclusive. So the more demand, the less exclusive a brand becomes as more customers attain it. So they need to increase the prices to, in essence, lower that demand to a certain extent so that they can keep that core customer base happy. And that's what we've been seeing. And of course, as a South African or an African, it's even more taxing on us. Of course, a Chanel handbag was just pre-pandemic, three or 4 years ago, trading at about 100,000 Rand new, which is still a ridiculous sum, but now it's up to 210,000 Rand new. So that's double in just 3 years. But it also plays an important investment case, whereas in the pre-owned market, that's what's really made some handbags a luxury investment, because someone who purchased a Chanel handbag prior to the pandemic could now resell that handbag for more money, making a 30, 40, 50% return, depending on the condition of the handbag now, as opposed to what they paid for it.
I'm glad you've mentioned that. Let's peel through a little bit of, those brands that are able to appreciate. Of course, you've already mentioned Chanel. I don't think there's anything quite like a Chanel, Michael. But let's talk about other brands where you see that appreciation and you are able to, buy an item, keep it, and the market will take care of you should you decide to resell later.
So I think that case exists in many brands. What's important to remember, of course, there are your standout brands like Chanel, which generally appreciate very well or hold their value very well across their models. And of course, Hermes, we all know the Hermes Birkin. During the pandemic, we sold a Hermes Birkin at Luxity for 180,000 Rand in 5 minutes. So, that was as the entire pandemic was going on. So it just speaks to the demand for some of these luxury items. So Hermes Birkin, but many Louis Vuitton in South Africa specifically. Louis Vuitton was ranked the top brand by our report 4 years running, just coming second this year to Chanel. But Louis Vuitton holds its value well because of the massive demand in South Africa. It's by far the most sought after brand in South Africa. But as I mentioned, it's important that you understand the brand if you're looking to invest, and understanding which models of the brand are iconic and sought after. And once you know that, those are generally the models that are going to hold their value well or appreciate well.
Let's also talk about the items of choice here. Of course, we have spoken about handbags. I think that goes without saying. Are there other items that are also more likely to hold value than others, Michael?
Yeah, of course. So traditionally, actually, handbags are a new category in terms of holding value or appreciating. It's really only in the past 5 years, with pre-owned resellers, becoming more commonplace, where they started to appreciate. But traditionally, we know the likes of Rolex or luxury watchmakers. Those are a very well-known alternative investment. Also grew very well during the pandemic. Have recently had a small crash, but there's a good recovery there. It's even driven the original manufacturers like Rolex to go into the pre-owned market because of the amount of demand there was for purchasing these items for the investment case. So Rolex, from the luxury watchmakers, but also in South Africa, we particularly see a strong growth in Cartier jewelry, very high in demand and holds its value and returns very well. So there's definitely across the luxury spectrum a lot of potential when we're looking at items that don't hold as much value in South Africa, which may in America or Europe sometimes is more the apparel. So, your couture apparel, because we don't, as Africans, have such an understanding of it and its heritage as your more Western market might. But over time, this is definitely something we see changing.
I must also ask you, Michael, about counterfeit goods here, because what we also do see is this a very strong counterfeit market here. And if that at all is, compromising value, especially with value storage, or is the process that we have, for instance, for certification, and maybe very, legitimate resellers like Luxity, making sure that the second-hand market can survive and even thrive, irrespective of what happens with the counterfeits?
Yeah, I mean, the counterfeit market's always been there, and it's always plays an effect on not only the pre-owned market, but the new market, of course, as well. But it's also something that, in a way, helps drive the brands to innovate and improve and ensure that they're able to offer something more than just the brand. So when you're buying an original, you're not just buying the model and the design and the brand, you're actually buying the quality of that bag. And that's what really counts. It's the heritage, it's the quality, it's the manufacturing standards, it's the material. And, the counterfeiter, they're not looking to counterfeit that. They're looking to counterfeit the look of it and perhaps the prestige that comes with it. But the fact of the matter is the item will fall apart quite quickly generally, no matter how good the counterfeit is. So that's what really the pre-owned market is buying into, is offering you that case of buying something that's authentic, that is going to last the test of time. Thus, you can sell it one day, but it's also more sustainable because it's something that you can use and reuse, pass down, down your family, or resell for someone else to use and reuse, possibly pass down. So that's what we're really, investing in, is something that's going to last more than we're investing in a brand.
Got you. It's a very important distinction to make also, Michael. Let's also take a peek at these LVMH numbers that have come out here. We saw, a very, I think, small increase in revenue, 3%. Is this considered to be strong in light of the global macroeconomic environment?
Yeah, I think, like I mentioned, we have to look at it and phrase it in the fact that we're coming off of a record year. We're coming off of post-pandemic. The luxury industry weathered the pandemic really well. So it's not a case where, we had this huge pandemic dip and the recovery was just to make up for that. We've come off a record year and we've still got a lot of underlying global economic issues that are affecting this, like they mentioned in China specifically. But overall, the luxury industry is quite a defensive industry in terms of economic headwinds because it appeals to the more affluent clientele. So although the LVMH results seem a bit lower compared to last year, they are still seen as good because they're expected. And we're looking at normalizing the industry at around a 4% growth rate. So it's not far off of that.
I must also ask you here, about the impact of China's growth or lack of growth also on the overall market. You did mention earlier that, Asian markets are where these brands have traditionally looked. They might have to look at, Africa now for proper green shoots. But China's luxury market, Michael, that's something that I downplayed until I realized the impact of that consumer on all goods, from vehicles right through to a Birkin handbag.
Yeah, I mean, the market is massive, and it's really, it's even at the current level of potential that they've been able to tap. There's still so much more potential, and it's understanding and really being able to access that market. And it's something, when it comes to luxury goods, what's important to understand is that's not a market that China has been able to replicate. So, they've been able to replicate other markets, technology markets, get their own brands in that. But when it comes to luxury, the heritage of those brands is what it's really selling. And that's not something you can replicate or knock off overnight. So it's really an important market because of that factor, not only because of the size of the market, but because it can't easily be replaced in the market.
Now, Michael, I want to, for the benefit of our viewer here, just, possibly give some light to the process behind buying a luxury goods item, especially for middle-class people who don't often tap into luxury items here, just some advice about what items might be the best, where to look for items, and things just to be careful for, specifically if the aim is to store value for the future.
Yeah, well, I mean, I think what's important is, knowing where you're buying your item. So traditionally, if we're looking locally, for example, you will never find a luxury item in not a luxury item store. So if you're looking to buy a Louis Vuitton, it's only going to be sold through Louis Vuitton. Typical scams that people are selling, or this, it fell off the back of a truck, or I imported it, or things like that. Oh, I'm a private shopper, so I have special access. That kind of industry doesn't exist when it comes to luxury items. They protect their distribution, their customer, all of that by having that direct access to them. So be careful, make sure you're purchasing it direct from the source. Now, of course, you can also purchase pre-owned, and there are many places you can purchase pre-owned, but it's important you can trust the person you're selling. So with Luxity, we have a lifetime guarantee. You know where to find us. We're in 4 malls nationally. Building that trust is the most important, because should something go wrong or should you feel uneasy, you know where to go. In terms of what to buy, well, I think that it should always start with something that you personally are drawn to. These are still luxury goods. You should still do it for yourself, not for an investment, not for, if you can pass it down. It should make you feel good. So that's the first part. Of course, then if you're conflicted, it's good to do research, understand the brand, understand what makes that brand special, and see if that item really does fit that persona. Because you might be attracted to Louis Vuitton, but there might be a brand that, offers that certain type of item a bit better, that you could do more research for and gain that affiliation to over time.
Brilliant. And before we go, must touch on Luxity and the growth of the business, how it is faring. Like you said, in 4 malls, Michael, what are the plans there to grow this business that has become an important part of the luxury market?
Yeah, we've spent a few years now getting into the 4 biggest cities in South Africa. Last year, we opened Durban and Cape Town. So we're very excited, and we're growing across those markets. And recently, we've started doing a lot of reinvestment into technology. We're the first omni-channel retailer in South Africa. So, we're going back to our roots, digital. That's where we came from. So really investing in technology to help that consumer and make sure that you're having as luxury experience, whether it's digital or in-store, and as personalized an experience, even though you're buying pre-owned.
Brilliant, Michael. It's been a pleasure having this conversation with you. Thank you so much for schooling us today. That was the founder of Luxity, Michael Zahariev.